that KTOS is a wonderful setup that is happening right now. And to see what they have is the pattern called the ascending triangle. The ascending triangle is has a higher low, for example, right here and right here. This right here is this right here is higher than this low, and this one right here is higher than this low. So we have a higher low, higher low, higher low, higher low equals an ascending triangle, especially this part right here. We have two tops and a third one. Right here is a breakout. Do you see that breakout right here? The breakout with the volume of, if you check on the left side, you hover your mouse right here, and on the left side you can see that it's 20 million. So from right here to here is 20 million, and the average volume is 3 million. So it went up approximately 6 times, 5 to 6 times. Once it broken out, it went back down below the resistance line and then went back up above the resistance line. So we know for sure right now it is a good entry to buy it at $28 or $29 and put your stop loss around 27.30 cents. Or if you want to be more careful with a bigger cushion, I would recommend $25. There's plenty of ways to put a stop loss. There's one right here you can put below the lowest of the day, which is around $28, and you can get in around $29.37. Put your stop loss right here, or at the lowest right here. And if it goes below the 50 EMA, a lot of people love to put their stop loss tad bit below the 50 EMA. So it will probably be $26 as their stop loss. And this right here, the resistance line, will act as a support line. So this price action has to be above the support line to have a comfortable entry. And then some people would like to put their stop loss a little bit tad below the support line, around $28.30. So it depends on your comfort level and how you like to manage your money. Some people will put in a perspective of affordability, like a ratio of how much are we willing to afford. Like a cup of coffee is about $8. So you probably say, I'm willing to enter around $29 and put my stop loss at around $21. So a difference of $8. Or some people would like to say, okay, I'm willing to put my stop loss at $28 and buy at 29. It's only a dollar difference. So you say to yourself, how many times of that will equal to a cup of coffee? 8 times. So you buy 8 shares, which equals $8 because of the difference of a dollar from 29 to 28. Also, there are many reasons to like this stock because it's on an upward trend. You check out the weekly chart, and as you can see, it has moved up following the 50 EMA line, and it crossed the 200 EMA line right here. The 50 crossed the 200, so you're more comfortable and you know for sure this is a upward trend, a bullish market. And this is a defense and security solution, and we can check their financial to see if it's a sound company. The financial revenue looks very stable. Every year, practically every year, it has moved up and up. Now let's check the statement. And most importantly, we got to check the free cash flow, which is around right here. The most important is the trailing 12 month, which is 1.6 million. So they do have free cash flow. Next, we have to check the daily the daily 200 EMA line, which is above, the 50 EMA line, which is above, and 20 EMA line. These three are above and is parallel to each other. When these two are parallel with each other, you are comfortable and saying to yourself that you want to enter. As long as these are parallel, you are happy. If the 20 crosses the 50, we have to be careful. When the price action is below the 50, we have to be careful. If these two, 20 and 50 EMA, cross down below the 200 EMA, you know definitely it's in the bear market. But for now, we are bullish about KTOS defense and security solution. Next, we can look at the Heiken Ashi. The Heiken Ashi is a Japanese candle, and you can check the pattern to see if it's currently moving up or down. And usually we'll see 6 white candles in a row before it goes back down. 6 and go back down. 6 and go back down. 6, which is only 2, goes back down. So you see the pattern. Usually it's a 6 upward candle that's white, and almost every time will be 6 candles going back down. And you see right here, oops, and you see right here, this candle is 1, 2, 3. It's only 3 times. So you can assume there's 3 more candles that want to go up again, or 3 more candles that want to go down. But we have a support right here. So keep your eyes on it. Always keep an eye on your price action. Next, we can check the depth. You click on the left tool right here, and you look for the date and price range. The date and price range, you put it right here, you bring it down low, and you see it's about 20%. So from right here, here's what, 20%. You want 20% approximately. Anything more than 30% is pretty too deep. You want a shallow depth around 20, 15, maybe 30, 40 the max, but not 50. So after that, if you got a 20%, you're comfortable because the swing and the price action, you know for sure 20 is the max you're going to lose, 20%. And also we can check the support and resistance. So right here you can check the horizontal ray, and you can give a rough estimate. So you have 1 right here, 2 resistance, about 3. So around right here, you know for sure that the price action will move not below this right here. If it does go below this, we know for sure it's in a bear market. But now it is in a bullish market. So no worries about that. You are having more confidence every time you see the stock. The next thing we have to look at is volume. Look at the volume. 1, 2, 3 greens above the moving average versus 1 red. Lots of green, less red. Can you see that? Maybe institutions are buying into this, we don't know, but we are comfortable that there are people playing this stock also, much more comfortable to see support behind you. And then you can check the next candle, which is the wrinkle. The wrinkle is pretty tricky. They move by blocks. So with this block, you know for sure right here, this line right here is $29. You go to the regular candles and you say to yourself, okay, $29 is a rough estimate, a rough area. So you know it's going to be hanging around in this area for a long time. So if that's the case, you can put your stop loss around 27, 28. Next you can look at is how is the movement going? Usually count the candles. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4. And right now we don't know if it's going to be 4 down or 4 up. Next, we can check something. It's called the base. How far the base is up there. The base we can count is right here. This is a base, and this is a base. So this is base 1. This is approximately base 2. This is approximately base 3. But once this undercuts the previous base, it resets itself. So you can tell that this right here is one whole base. One whole base right here. If you have a hard time, you can go to weekly, which I'm having a hard time looking at. That's correct. This is one whole base right here. One whole. You can see this is a cup and it's sort of a handle. This right here also. We can call this zero base. Zero base. Base number 1. You see it goes right here. Touches here, so it's going to be one base. This is still one base. So this is base 1. Base 0, base 1. This is base 2. So we're in base 3. And usually base 4 and 5 is most likely to not break out. Usually a good breakout comes from base 0, base 1, base 2, and maybe a 50-50 chance on base 3. Okay, so that's how we have it right here. And now it is your turn to just take a look at it, check the news and check your own research and do your own diligence and see where it goes. And this is a 4.4 billion, so it's probably a small mid-cap stock, so be careful. It's very volatile, and we know defense is a good offense. Goodbye and good luck.